What's up, you guys? Dr. Ryan here with another episode of Smashing Wealth. In this video, we're going to discuss why you will probably lose your entire investment in Hertz stock and why Hertz stock going to zero. During this Hertz stock update, I'm going to break down what implications the recent auction of Hertz bonds has on the value of Hertz stock. We will examine the effects of Hertz canceling its $500 million offering of new stock and what impact this has on existing Hertz stock shareholders during this Hertz stock analysis. We will also examine if Hertz stock buy or sell. I will also dive deeper into the Securities and Exchange Commission position of reviewing Hertz sale of new shares in the company and its effect on shareholders, which resulted from the cancellation of this sale. Towards the end of this video, we'll be taking a deep look on what effects AutoNation and CarMax have on Hertz stock if they swooped in and started buying Hertz used cars. At the end of this video, I will share my Hertz stock prediction with you. You can take all this information, do your own due diligence, weigh your Hertz options, and make your own decision whether or not Hertz stock is a buy or sell. Your decision can have a potentially powerful impact on your portfolio and your overall wealth, so it's important that you make an excellent decision. So let's get into it. If we look at the Hertz stock news broke that Hertz bonds was being auctioned. Hertz bonds just sold at $26.37 on the dollar during an auction on Wednesday. It was all over the internet if you were following Hertz stock live. This means that if you invested $1,000 into Hertz bonds, you would be entitled to just $263.75 after the bonds auction. This would be a loss of $736.25, or in other words, about 75% of your investment. This auction of Hertz bonds was done to start to satisfy the hundreds of millions of dollars that Hertz owes. If you follow the Hertz stock market, you will know that Hertz filed for Chapter 11 bankruptcy, which means that all the debt that Hertz owes to creditors is being restructured in an attempt to allow Hertz to become profitable and solvent again. The fact that only 26 cents on the dollar was able to be recovered during this bond sale that took place on Wednesday means that the likelihood that Hertz stock becomes worthless in the future is extremely high. I am talking about Hertz stock going to zero during a Hertz stock bankruptcy. I know it's hard to imagine HTZ stock price going to zero, but let me explain. Debt is structured in different layers in a company. At the top, there's senior debt. Senior debt is secured by collateral. Hertz senior debt is secured by the cars being held as collateral. These assets back the debt that is owed. Senior debt has the highest priority in Chapter 11 bankruptcy. This debt gets paid off first. Since the debt is secured by collateral, which in Hertz's case is mostly car inventory, these senior debt holders have the right to sell the cars to pay off the debt that's owed to them first. The next level of debt with less priority than senior debt is subordinated debt. Subordinated debt is typically unsecured. These are forms of debt that's not backed by collateral. The bonds that were sold off on Wednesday are a form of subordinated debt. The next level of debt, which has even lower priority, is preferred equity. Preferred equity is also known as preferred stock. This level of debt has even lower priority than subordinated debt. In Hertz, this would be the preferred stock that was issued. Underneath all of these forms of debt, you will find common equity. This is what you would probably be most familiar with. Common equity is the form of debt that you'd buy in the form of stocks from Robinhood and Webull. By the way, you can get one free stock from Robinhood just by opening up a free account, and you can get two free stocks valued up to $1,400 from Webull by opening up an account and depositing just $100. As you own the lowest form of debt in the form of stocks, this presents a serious issue to you. This is an issue because of how money is distributed throughout the layers during a Chapter 11 bankruptcy. Debt is paid off in order of priority in a Chapter 11 bankruptcy. During a Hertz stock bankruptcy, which is taking place as a Chapter 11 bankruptcy, senior debt, which is backed by collateral, is paid off first. After senior debt is paid off, if any money is left over, it is paid towards the subordinated debt, which includes the bonds that we spoke of earlier, which was sold at 26 cents on the dollar on Wednesday. If by any chance any money is left over after paying off subordinated debt, preferred and common stock is next in line to be paid. The issue is that there's rarely any money left over to pay to common stockholders who buy their stock through brokerage accounts like Robinhood and Webull. I find that this bond sale on Wednesday is further proof that no money will be left over to pay off common stockholders after this Hertz Chapter 11 bankruptcy process has went through. If bonds were auctioned off at almost a 75% discount in price, this foreshadows that there's not enough money to pay off regular stockholders who are at the very bottom of the priority list. Think about it. If bondholders are accepting almost a 75% loss on their investment, how much money is really going to get to the bottom of the priority list, to you? Despite this, Hertz stock has been rising in value as investors have been rapidly buying up Hertz stock shares like crazy. A huge chunk of the investors who have been buying up Hertz stock are millennial investors on the Robinhood app. Some of these investors have sold at high prices and have taken tremendous profits. All the best investors have smashed the like button for the YouTube algorithm. In just the last few weeks, Hertz stock share prices have reached almost $6 a share. This is unheard of for a stock which has filed for a Chapter 11 bankruptcy. If you follow Hertz stock news, you'll see that the amount of money pouring into this stock has even persuaded Hertz to consider selling $500 million in new stock in an effort to raise more funds to help the company in its Chapter 11 bankruptcy process. Hertz realized that there were so many investors on Robinhood and Webull buying its bankrupt stock, and that it could raise $500 million by just creating and selling new stock. Then they could use this money to pay off their senior debt, which is collateralized by the cars in their inventory, and pay off the bondholders next after their senior debt was satisfied. Common stockholders on Robinhood and Webull could lose money in two different ways in this situation. Let's break down how this would be possible in this Hertz stock analysis. First off, if Hertz issued new stock, the value of all its pre-existing stocks would be diluted, and as a result, they would be worth less. The second thing that could have happened is that during the debt restructuring process of Hertz stock bankruptcy, there could be a decision made to wipe the slate clean and get rid of all the old stockholders. In addition, all the new stockholders would be wiped out as well if there's not enough money left over after satisfying the senior debt and the subordinated debt that the Hertz company owns. You have to take this into account if you're looking at investing in Hertz stock today. The Securities and Exchange Commission quickly realized that there's so many investors that were investing in the Hertz stock market without fully understanding the risks involved in investing in the company in Chapter 11 bankruptcy. They issued a notice that they were going to review the sale of the shares, as a bankrupt company selling new shares is unheard of. Upon hearing that the SEC was becoming involved, Hertz decided to cancel the sale of $500 million of new Hertz stock. In rare cases, it is possible that a company that goes bankrupt can still have its shares hold some value. In Hertz's case, its stock would need a rapid increase in air travel and a big uptrend of car prices in a time where few people are traveling or buying cars to create any kind of demand. At this point in this Hertz stock analysis, we have to take a look at another reason Hertz stock share price has shot up and has become one of the top 50 most traded stocks on Robinhood. There are talks on Hertz stock news that AutoNation and CarMax would buy Hertz used cars. There are estimates put forward that selling 150,000 used cars could raise $3 billion in cash that Hertz could use to pay off its senior debt holders and its subordinated bondholders. When you take into account Hertz would only raise $3 billion in cash, while there are about $11 billion in securities which hold collateral in Hertz car fleet, you can quickly calculate that there's not enough money left over to pay to existing stockholders. Some investors went to rapidly buy Hertz stock, thinking there was going to be this game-changing merger of AutoNation and Hertz, or some kind of merger between CarMax and Hertz, which would magically save the company. At this point, this simply is not true. You can probably tell that I don't think Hertz can raise enough capital to pay off all its senior debt, which is collateralized by its car fleet, plus pay off its bondholders and still have enough money to keep pre-existing stockholders on board. That's why my HERTZ stock prediction is that eventually existing HERTZ stock holders will be wiped out. I'm going to get across during this HERTZ stock update that there is a possibility that exists that there will be even more volatility, and we can see HERTZ skyrocket up to $6 a share again or even higher. Yeah, it's possible in the short term. I feel that eventually someone will be left holding the stock when we're all done playing musical chairs, and that person won't have a smile on their face when they're left holding a bankrupt stock, which is worthless. With that being said, this is my own personal opinion. You should always do your own due diligence with any investment. You risk losing your entire investment, and this video is for entertainment purposes only. Just a heads up, I have another video detailing the Hertz Chapter 11 bankruptcy process, which goes into much more detail than this video about what's going on and how the process works. I will link in the description section and in the cards on this video. Just click on the eye in the upper right hand corner of this video, that little eye icon, and there will be links to this expanded video. Question of the day. Let me know in the comments section if you think that HERTZ stock will make a full recovery and will successfully come out of HERTZ stock bankruptcy. If you made it this far in the video, please consider smashing that subscribe button and turning on the notification bell to be alerted when I release future videos. I highly recommend joining our mailing list by going to smashingwealth.com. This way you'll be the first to know when I release new videos in the future. I left a link to join our mailing list in the description box below. Obliterate that like button if you're feeling generous. Feel free to share this video if you felt that this video helped you learn more about the HERTZ stock bankruptcy and your HERTZ stock options. You can also hit the save button to bookmark this video to come back to this video later. Feel free to follow me on Instagram and Twitter at RealDrRyan. Don't forget to claim up to 3 stocks for free from the links in the description below. You can claim 1 free stock from Robinhood. You can take it a step further, and just by depositing $100 into another stock platform named Webull, you can claim up to 2 free stocks, with one of them being valued up to $1,400. That is free money in your pocket. Let me know which free stocks you get in the comment section. I hope you enjoyed this video on HERTZ stock bankruptcy. This is Dr. Ryan. Until next time, have a smashing day.